Buying and selling. Quick shout out to a couple of supporters that we love. K-Beach is a college radio station, and supporters are what keep us going. The Coastal team at Keller Williams Pacific Estates, Gina King and Joanne Morris, two great ladies doing great work in the real estate industry, supporting this show, and we love you for it. You can reach them at 562-888-0404 or longbeachcoastalteam@gmail.com. Thank you to the Coastal team and all of our supporters. We love you. Topic today for buying and selling: the feds have a sunset on low rates, according to our Dean of Homeownership University. He's saying enjoy them while you can.
Yep.
So what are you telling us here? The low rates that, by the way, low rates, we say this all the time, 4%, 3% is unbelievably
that's
low.
Not low. That's gutter rate.
Yeah, we are.
It's almost, yeah.
And then there's still people that go, oh my God, why can't you do 2%?
I know. Where's my 3.5?
But these rates have a sunset, according to the dean here, and we should.
It sure sounds like it. Initially when I submitted this, it was Bernanke was
Bernanke.
saying, I think I said it.
He's
right.
like Chadap. You know,
Bernanke
and Chadap.
Gotta get that second N in there.
Yep.
He basically said that they were expecting to have the Fed keep rates low through 2013. Well, when the Fed actually met, what they came out of the meeting with is that they're committed to keeping the interest rates about where they are today until the end of 2014. And he actually had to defend this position in Congress like a couple days ago because now there's all the fears of inflation because they're forcing the interest rates down so low. And
can they really guarantee or not guarantee? Can they really say we're going to hold them down for 2? You can't do that.
Well, that's what the Fed is. They're the brake, the accelerator. They're the accelerator.
Actually, you know what? I've got to make sure that I clarify this. They're not talking about mortgage rates.
No,
they're talking about the overnight lending.
They're talking about the rate.
The cost of money for banks to borrow money from each other and from the govern't,
and that's lower than
it's at 0%. Yeah,
well, close to
0.25%.
Yeah, it's like 0.0025.
So it indirectly affects mortgage rates.
Yeah, but I mean, lots of things can happen to drive a mortgage rate up and down, right? I mean, the economy, it's the economy, stupid. But, I mean, things can happen in the world. There can be wars. There can be threats. There can be terrorism. There can be all kinds of things.
Well, it's also, there's the gas station analogy, too. If you see the price of oil goes up, then all of a sudden the price of crude goes up.
Right.
And all of a sudden, all your local gas stations, all the price goes up. But they're pumping gas that's been refined years ago at the old price.
Right.
So why are they raising it? We saw the same thing when they did the extension on the what was that, the tax extension or the 2-month extension on the. What are you talking about? Is employment tax or
the payroll tax?
Oh, the payroll tax. When they extended the payroll tax for 2 months, it raised fees on banks for 10 years. And so what we saw was an immediate jump in interest rates by a couple of ticks, even though the fee hasn't been assessed yet. But because it was mentioned, it went up. So
when you brought this topic up, something in your mind had to be saying, we're going to see interest rates 6, 7, 8, maybe more.
A year ago, I think in 2010 I was predicting interest rates of close to 6% in 2011. Yeah, that's a natural economic cycle. That's a natural market.
Right.
But the Fed is continuing to go in and just artificially manipulate the flow of the cost of money in order to stimulate the market. And I don't know. It's I'm not smart enough to say whether they're doing the right thing or not, but my gut is saying dump them.
Dump them. Dump the Fed.
The Fed also, for the first time in its entire existence, said they were going to pretty much try to manipulate inflation itself, which they've never said that in the 99 years that they've been around.
How do you manipulate inflation?
Yeah, exactly. They're doing it. But it's the first time that they said they're going to do that. It's crazy.
So here's kind of the reason why I brought this up is if we have a sunset, don't wait. The interest rates aren't going to be any better than they are today. The only thing that could possibly improve is demand. And if demand starts to improve, then you're going to start to see home prices start to go up, and you just don't wait. Now that there is a sunset, if there is one, I mean, we've been in this for a long time now. I just don't see waiting any longer because rates aren't going to go any lower. Every single day, the rates are going up and down. I have a really, really strong feeling that they're going to be within 0.5% of this, high 3s to low 4s for the next few years. So waiting for rates shouldn't be your motivation.
I had something very interesting happen to me in this past week. I got an opportunity to sit into a room with 6 experienced real estate agents that represent probably 6 of the top 20 agents in Long Beach. Lots and lots of business, and they've been around for at least 15 years. And they told me that when interest rates go up, you sell more houses.
Yeah.
Every one of them, all 6 of them said, when interest rates go up, not down, up, you sell more houses. Yet the government thinks that the opposite. We got to keep the interest rates down to stimulate the business. Who's right?
Well,
no,
I think
they're right. They're
they're
absolutely right because then you have the fear of loss.
It's right.
So if the rates start to go up, then you feel like, oh shoot, I waited too long.
It's right twice, basically. It's right when they shoot up and then when they shoot down.
Right.
When they shoot up, it's a panic buy because you feel like I'm going to totally miss out and lose completely. When they shoot down, it's an advantage-seeking purchase because, like, wow, things are so low. All of a sudden, let's move, let's go forward. But when you have rates as good as they are for a period of time, people get lackadaisical and they don't know which direction to go.
It's like a housing market purgatory.
It's just a float.
There's just nothingness.
But I think it's more the correlation of high interest rates to high purchases has to do with more. If you have higher interest rates, it's probably because the economy is doing much better. And if the economy is doing better, that means people have more money to spend in their homes. They have consumer spending's up, and that's why they're willing to purchase. Because Scott, you say this all the time. It really is just the confidence that you have a job, you're going to be able to make payments, you have money, you have savings. So that, to me, when interest rates are up, it's probably because the economy is doing better, and that's why people are purchasing.
Well, what's funny is did you see the I guess Buffett came out like a couple days ago and basically said that he expects the housing market to drive the improvement in the economy.
Yeah, I did see that.
But I think that's kind of the opposite. That's kind of what we're talking about. People aren't buying houses because they're unsure about the economy. So they think that people are going to just go out and start buying houses not knowing. And then we have this whole fiasco with all of the convoluted employment numbers that were absolutely opposite of what they appeared to be. And now all of that's starting to come out. Who are you going to trust? Who are you going to believe? The government can't get away with manipulating these numbers and putting them out there, because as soon as they do with the internet and people having access to this, the truth comes out. And the truth comes out is they're flubbing the numbers to try to create a false sense of security. And isn't that kind of how we got into this in the first place?
Scott, are you suggesting that the government should raise rates and stimulate the housing market that way?
What I'm suggesting is that somebody way smarter than me that understands economics needs to figure out a way to cut off the life support and let the heart start beating on its own and try to let a normal supply and demand capitalistic...
Let the free market be free.
Let the free market be free. It will recover.
And we've gone so long like this that it's, if we had let the natural order of things even happen with the housing market, we may be halfway through a recovery right now. Exactly. I believe.
I think
so.
But
and the patient may have had severe injuries and things like that, but survived. Yeah. Right now,
he's still on life support.
He's on life support, and you pull the plug, and he's going to. I mean, it'd be a slaughter, really. And the Fed, as much as they have to manipulate the banks, as far as they even have to manipulate the flow of foreclosures. We're just in an all-around tough situation. It was the right idea with the wrong result by the Fed, by this administration, basically, I believe.
Right. And
the Fed screwed up?
Well, and also the fact that they're driving this out-of-control class warfare kind of semi-truck that's going out of control. They don't understand those are the companies that you expect to employ people.
Yeah.
So quit screwing with the people that are creating all the jobs and the entrepreneurs and all of this stuff. It's just you. Oh man, I thought this was America.
It doesn't help that in the past year.
That's my segue. By the way,
it doesn't help that in the past year the sentiment of the powers that be right now has been really pushing away from independence and self-reliance and free markets and home ownership. They've actually put the threat of taking away tax breaks for home ownership and things like that. Where's the incentive to buy the homes and help the market adjust?
Okay, now I know I've got to throw a curveball here because typically next we do mailbag and then we get into a closing topic. But I'm going to switch that up. We're going to do mailbag a little later because –